crucial webinar on Trump's most favored nation pricing model, what holds for Indian pharma. The MFN order has sent shockwaves across the pharmaceutical industry, particularly among high margin innovator drug makers. The recent executive order issued by the Trump administration aims at bringing prescription drug prices in line with the other developed nations. With the US being a critical market, accounting for about 40% of India's generic drug exports and over $9 billion worth of pharma trade annually, the MFN model raises significant questions for exporters, investors, legal teams, and policymakers alike. To explore the evolving regulatory landscape in the US and how it's shaping the Indian pharma industry, we have joined by an esteemed panel of experts today who will be helping us unpack these implications from multiple perspectives. I would now like to invite the speakers, namely Bhavin Mukund Mehta, Vice Chairman of Pharmexcil and Whole-Time Director at Clip Drugs, Vishal Manchanda, Pharma Analyst at Systematics Group, Nishit Sanghvi, Director and Co-Head, Pharma and Healthcare at India Ratings and Research, and Sonam Chandwani, Managing Partner at KS Legal and Associates. Mrs. Chandwani will be joining us in a while. Hello, speakers, and thank you for joining us. I am Rashmi Mabian Kaur, Principal Correspondent at ET Pharma, with Abhijit Singh, Digital Content Creator, ET Pharma, and will be co-moderating this session today. If all the audiences has any of the questions, please drop us in the question and answer box, and we would like to take this after the panel discussion. And to begin the session, I would now like to go to Mr. Bhavin. From the investor's point of view, how do you view this most favored nation pricing order by the US administration, and how is Indian pharma companies looking at this announcement?
I think so. MFN pricing is makes the healthcare more affordable for the American patients, which is a goal that we all support. Because as such, Indian pharmaceutical industry is known for supporting the generics all over the world, and this is a good step that is a welcome for all of us. Now, the concern one here is only that the MFN is yet to be defined, or it's still to be enforced. So the pricing model, what will be, whether it will be ex factory or landed or government negotiated, that is still not being finalized, right? So unless until we have the clarity on that, it will be very difficult to give something on that how it will work and how it's going to impact as an Indian pharmaceutical exporters from here to US.
If we are to understand, do you see the MFN pricing accelerating a shift in the export focus from the US to the emerging markets?
So, ma'am, we need to understand how is the US total market size and how it's being spread. So, if you consider this year's market that they've projected, it's almost like $660 billion, right? Now, out of this $660 billion market, if you consider what is the branded or the prescription medicine that they are prescribing, right? That compromises almost like $500 billion. Now, what we are left with is just $133 billion, which is a generic market. Now, the Indian companies who are exporting products usually are competing in this bracket. Now, if I do the 80-20 of the US market, which is $660 billion, there are 10 products which constitutes almost $140 billion market in US itself, right? So my point over here is that the generic market, which is 133 billion, out of that, India is exporting $36 billion out of 36 Indian exports is around 36%, which is around 29 billion, which is around $11 billion, right? From Indian exports. The total Indian exports, which is happening, is around $29 billion, out of which 36% is constituted going to US. So it constitutes almost like $11 billion, which is being exported to US. Now, the point over here, as you're saying, is from 133 billion market of generic, we are just constituting less than 10% of the supplies which is being made, right? So I feel going forward, the pricing pressure will come on the top 10 or the 80-20 ratio. It's a Pareto's principle will always be applied over here. So we are coming in the bottom 20 where we are already competitive. And I feel after coming this, our exports will have more say, or we'll get a more exposure to these, because India is the only country where we'll be able to compete on price and the quality, which the world is looking over.
And what is the expected impact that you see on the small and mid-sized pharma companies in India that specifically rely heavily on the US sale?
Ma'am, I feel that since if we apply the Pareto's principle, and the impact is going to come on the larger brands or the larger products which are going to be impacted, I
Mhm.
feel the smaller and medium size will have more inquiries, or they'll be benefited in a way, because everyone will be now looking at India or buying generics from India.
Mhm.
Correct. So there'll be a good opportunity being created by getting the MFN status to the Americans.
Thank you, Mr. Bhavin. Abhijit, over to you.
Yeah. So now, just extending that opportunity point, the executive order which has been issued by the White House suggests that the administration is also looking to facilitate importation programs and increase the availability of generics and biosimilars in US. So, for how it could impact Indian exports and how exporters could take this opportunity.
Correct. So there'll be a plethora of export opportunities which is going to get generated. As I explained, that we are just 11 billion out of 133 billion, and I'm very sure we are going to untangle, or more and more products are going to getting off patent this year and next year and all that. So those opportunities, moreover, Indian companies are the maximum who have filed the NDAs. Correct. So coming next few years, the future for the Indian pharmaceutical exports to US is very bright, and I think so. We are going to make more milestones and higher uh, percentage of contribution towards the total exports being done by the country.
Thank you, sir. Thank you. Now, would like to move to Vishal, sir, from here. So now would like to move to Vishal, sir. Sir, now want to take your view. How do you see the investors and market standpoint? This most favored nation pricing order going to impact for Indian investors?
So I have a very different view here. I really don't believe there's going to be any impact on the Indian pharma companies because of the MFN drug pricing. So one, I think the MFN drug pricing would largely be impacting the innovators, and that too, if at all it is implemented. So I have my doubts whether the MFN drug policy would eventually be implemented. So that's one. Innovator drugs getting impacted and generic drugs would be spared. It's just because uh, there's not much differential in terms of pricing when it comes to uh, generic drug pricing in the US or generic drug pricing in other developed markets. So the MFN drug pricing regimen is meant to play on the differential pricing, and since there is no differential pricing, uh, so I really don't see an impact on the Indian pharma companies, except companies like Sun Pharma, which do have an innovative portfolio, and they might stand to get impacted if at all this is implemented.
Now request Rashmi ma'am to take over.
Okay, so as you focused a little on the segments, if you could highlight a little on how much do you see the impact to be, and what are the other pharma companies you think will be the most vulnerable under this MNC pricing, MFN pricing?
So I think the rule, if it is implemented as proposed, it's going to be disruptive. It's going to be disruptive for the entire pharmaceutical industry, the innovator pharma industry, when I say, and no impact on the generic industry. Among the Indian companies, the only one that has an exposure to patented drugs is Sun Pharma. So that stands to be impacted. But if you look at the market reaction when the executive order was passed, the market reaction in the US when the executive order was passed, the stocks, the large cap stocks in the US didn't react to the executive order. While if you look at the impact that this executive, if you kind of try to quantify the impact that this executive order can have on companies, it's like it can wipe off 50 to 60% of the earnings of the large companies in the US. So when I say large companies, I mean companies like Pfizer, Bristol Myers, Abbott, Roche. All of these can see 50% or a larger share of their profits getting wiped off. But this market reaction kind of reflected that the MFN drug pricing, if at all implemented, it will be very much diluted in its nature. It will not be kind of in the format that one is expecting it to come. It will be very diluted and unlikely to have a significant impact.
Thank you, Mr. Vishal. So, going to this, Mr. Nishit, yes. So, how will MFN likely impact the credit ratings, if you could let us know, especially for the Indian pharma companies with large US exposure?
Yeah, sure. So I think the previous co-panelists have already said that probably, there may not be any material impact on the generics business of Indian pharma companies.
Mm.
So I think we are also aligned to that view that, in the near term to medium term, we don't see any impact on the generic pricing because generic pricing had its own dynamics. And what can probably, for the future, probably what can happen is that given that these generic products that are launched are probably a second order, there can be second order impact in lieu of the potential market size that can get actually lower, if the prescription prices come down. But that can be a long term impact, and it can impact future growth if at all this comes in the form and shape. So we don't see any impact in the near to medium term on the credit matrix. Also, what we would like to highlight is that the over the last 1.5 years, the generics business have done pretty well because the price erosion in the US market has been benign. As a result of which, what has happened is that due to improving cash flow positions of companies, they have deleveraged their balance sheets. So we have seen also what we have seen is that raw material prices have been lower. And also in a couple of US focused players, we have seen private equity participating and taking majority stakes. So a confluence of three factors. First is deleveraged balance sheet, maybe in some cases cash-rich balance sheet, lower raw material costs, which probably may sustain for some time, and healthy financial flexibility. So all these three factors will keep the credit matrix healthy, even for US focused pharma companies in the near to medium term.
Abhijit, you would like to go ahead?
Yes, yes. Nishit sir, just want to ask that are there any risk mitigation strategies which Indian pharma companies are deploying after this order, both operationally and financially?
So basically, what we have seen, a couple of players have, given that the US dossiers that companies file, they can be replicated in multiple markets. I think US facilities being, globally compliant, it also tends to fast track approvals from other regions. So, these factors also lead couple of players to, start thinking about diversification and launching the same products in other markets. So to that extent, diversification is on people's mind. Diversification can be in the other developed markets where the pricing is relatively fair and okay, and to some degree in the emerging markets. Now, on the emerging markets, there is an additional headwinds of currency that plays out. Having said that, but what even Vishal mentioned that US generic pricing may not be the highest in the world. So, as such, from a generic business perspective, most of the a couple of markets are lucrative. Also, needless to say that US supplies have a fairly high working capital intensity. So all in all, it's the diversification that companies are planning to do. I think couple of them have already started, and I think many of them are working on it. So that mitigation towards other developed markets and deploying their capital towards other emerging and developed markets is already being seen in our portfolio companies.
Okay. So, my next question is for Mrs. Sonam. What are the legal underpinnings of the Trump's MFN pricing rule under this US law? And in this move, compatible with the global trade practices and WTO principles?
So yeah, let's dive into the legal guts of Trump's MFN pricing rule. So this executive order, though rolled out on May 12, aims to reduce the prices by 30 to 80% in comparative to countries like Canada or UK. So it's bold, I mean, but is it legit? So the core legal hook here is the Social Security Act, which lets the Department of Health and Human Services test pricing models for Medicare. So that's why they tried in 2020 also, but court shuts it down for dodging Administrative Procedural Act rules. So basically, they skipped public input. Now this order stretches further, targeting private markets. So which feels like a leap, but they are also leaning on the Trade Act of 1974, Section 301, to threaten tariffs if drug makers or countries don't play along. So, I mean, as a lawyer, I'm concerned about this, but forcing price controls on private markets could violate the Fifth Amendment as a regulatory taking. And also, without Congress's nod, this smells like executive overreach. So, though it's a fleshy move, but it's on shaky legal ground, begging for a courtroom showdown. Also, your next question, whether it's compatible. Now, see, let's get to the global stage and have, discuss about the general agreement on tariffs and trade. Like, I would like to call it as, this was signed in 1947, though. It's about reducing trade barriers, and it's also include, principles like more favored nation clause. Every country gets the best deal. And also, there is this came out of WTO. So does MFN rules fit with these? Well, pegging US drug prices to foreign ones is a domestic move. So it doesn't directly break GAT rules like Article 11 banning export restrictions or Article 2 on tariff limits. But here's also the kicker that, the order's tariff threat could also clash with GATT gems. If the US slap, tariffs to force price cuts, that coercive and might also spark WTO disputes. So for India, this is personal, as the US already grumbles about Section 3, subsection 3D of patent law, which keeps generics cheap via the special 301 report. If they push for TRIPS plus IP rules like data exclusivity, it's a threat to our pharma companies. So India must channel, GATT spirit, fair trade, no bullying, and stand firm on its ground to protect our generics. So this is my view on this particular MFN, rules.
So you did mention about these aspects, but do you think that the links with US drug prices to the lowest price in the select developing countries could be legally challenged by pharma companies or trade partners, including India?
Yeah, I'm sure they can. I mean, in the US, companies like Pfizer or Merck will come out swinging, arguing the rule oversteps executive power. Also, they could lean on the Administrative Procedure Act. The 2020 MFN attempt crashed for ignoring rule-making protocols. So they might also say that, price controls mess with their Fifth Amendment property rights or invoke the major cautions doctrine, demanding congressional approval for big moves like this. So on the global front, if the US uses tariffs to enforce MFN, countries like Canada or India could drag them to the WTO, citing, the General Agreement on Tariffs and Trade, specifically Article 23rd for unfair trade practices. So for India, it's about defending our generics market. We have taken big on big pharma before. Remember I mean, if you talk about the Novartis case in 2013, where our Supreme Court upheld Section 3, subsection D. So, if it comes to that, if the US pushes TRIPS plus IP demands and trade talks, we could, we should we should rally developing nations and use WTO tools to fight back. So honestly, this is rule, just waiting for someone to take a swing. I think it could definitely be challenged.
Thank you, Ms. Sonam. Very important points given there. Abhijit, over to you.
Yeah, thank you, ma'am. So my question is for Nishit, sir. So, while announcing this order, President Trump clearly mentioned that I want equalization, a thing which many experts have described that might other global big pharma companies increase their drug prices in other markets. So, how do you expect any price hikes in other markets, and what are the possibilities of it's being reflected in India?
Well, basically, I think earlier, I think also panelists have alluded this that this is largely for prescription drugs in the US, where the pricing is is fairly high, maybe 5-6x of the generic pricing, maybe higher. When it comes to, I think the Indian prices or the I think developed market prices for the generic drugs, I think they are fairly low, and I think we should also keep in mind that the profitability now in the US market has shrunk quite a lot, versus in the past. So there is fairly limited scope, now to further reduce pricing in the US, and of course the US channel that procures the drugs itself, is actually a fairly big, decider on, how the pricing should move. So, I don't see that, at this point in time, getting into that argument regarding, how the pricing between these two, but because this is largely targeted at the prescription drugs, and not at generic drugs. So I think most of the Indian pharma companies, except for I think Sun are largely into generic drugs.
So, Vishal sir, my next question to you, since you mentioned in one of your arguments about Sun Pharma being exposure, apart from Sun Pharma, sir, we have seen companies like Zydus, Intas has licensed several of the monoclonal antibodies, biosimilars, cancer drugs in US. So, do you think apart from Sun Pharma, which are the companies being affected by these orders? Because Indian companies are expanding their portfolio to innovators, some of the companies.
So I think as Nishit pointed out, there can be a second order impact. So like if MFN is implemented, what will actually happen is the potential market opportunity size will reduce. Obviously, so like if drug prices come down and if they come down by 50%, if the US pharma industry is now $300 billion, the effective market size would probably will be cut to half, $150 billion. So that essentially impact if someone is looking to launch a biosimilar, like a case in point being, so we'll see expiry of a drug called Eylea. That's a biologic drug, and multiple Indian companies are targeting to launch biosimilar copies of Eylea in the US. So now, as of now, Eylea is a $7 billion opportunity, and assuming if the price is cut to half or even lower, say 33%, so then probably the opportunity size from $7 billion would come down to $2 billion. And to that extent, the biosimilar companies that would try to grab a share, the potential opportunity for them would significantly come down, meaningfully come down. That's going to be a challenge for biosimilar players, but we'll have to wait and see whether this pans out, because cutting down pricing by 50%, 70% means a lot to the innovators. You can probably push them into losses too.
So, since there is no such clarity on MFN still yet, but from the past, in his first term, President Trump was arguing for MFN that was restricted to the Medicare rate program. Then in the Joe Biden presidency, we have seen the Inflation Reduction Act. So, U.S. administration, what we see is been pushing for affordability in the U.S. healthcare system, and some of the US-based analysts have described this as it is leading to price erosions. In fact, recently, last week, during last week, I think Dr. Reddy's Q4 results when came up. So the company has has achieved a single-digit growth in North America, and they have attributed it with the price erosion in the markets. So do you see that in generics also the price erosion has started in US?
I think price erosion in generics has always been there and it continues to be there. The pace of price erosion varies a bit over years. So like currently it's around mid to high single digit, and it's in that range, and it's also specific to company's portfolio. So like Reddy's might see a high single digit erosion, Aurobindo might see a mid single digit erosion, but that erosion I think is there to stay because of the way the American system works in case of generic medications. It's a generic market. You don't have any brands. So every time there's a new competitor, there is a fresh negotiation happens. And if someone is ready to offer a lower price, that means the entire price across all participants, the price would correct. So I think this is going to be part and parcel unless we see a situation where we see significant shortages happening for generic drugs. I think as of now, I don't see there is a significant shortage happening for generic drugs. There is adequate capacities. Indian players have adequate capacities to service whatever demand is coming, and even the US market is not growing the way to kind of lead to a situation of shortages. So I think in terms of volume, if we look at the US market, that's growing only in low single digit. So with that kind of a growth, we really won't see a shortage situation is how I think. And so basically the price erosion situation should continue even in the future.
So for emerging players in India, like we can say Corona Remedies, who are not much exposed to US, but the company is looking to expanding to US. Just filed for IPO papers in India. So, do you think in future the US market is still going to pay the same value as we had seen over the last 2 decades?
I think this is what is creating a problem in the US. So the earlier entrants continue to be there in the market while we are seeing a series of new entrants. So those who are seeking growth, those who are already in India and they want to seek growth, they are looking at alternative markets. And US is one market where everybody wants to be in, and we are seeing an influx of new players, and that's creating the entire pricing pressure in the system. So while for the new entrant, it's a growth opportunity because they have nothing and they can only grow from where they are. But at the end, what we'll see is the market getting even more commoditized than what it is today.
Thank you, sir. So now I would like to move to Nishit, sir. So when the order came out, some of your reviews were being circulated by your organization. So among them, you have mentioned that there is a good opportunity for Indian CDMO players in this price cut order. So if you could please elaborate over that.
Yeah. So basically, I think the Indian CDMO players have already seen. So because what happens is that if the molecule size comes down, it becomes the profitability comes down. Then probably it is less profitable to manufacture in a high cost country like US. So to that extent, companies will try to back end their production to lower cost geographies like India. So I think that was at a broader umbrella level thought process. Now, which probably we are already seeing that happening with the cramps players or the CDMO players, irrespective, where the second sourcing or we have seen a lot of inflow of orders. So that was already playing out. I think this trend can also be seen. I think if this comes through, but also I think the other effect can be that certain global companies may start rethinking about their R&D spend in general, because your molecules and molecules are not generating as much revenue, so their capital allocation, the ROCE that they will be generating. So to that extent, the uncertainty on the discovery part of the cramps players probably can be seen, they can be impacted to that extent. But at a larger, if you see the manufacturing side, I think there can be opportunities where companies can start backending to lower cost geographies because the end molecule market size and profitability declines.
Now I would request Lakshmi ma'am to take over from here.
Hi, Mr. Nishit. So, one question that I had was, do you anticipate any price control measures from countries going forward, and how should Indian farmer really prepare for this?
So I think there, see, if you see, there are a couple of markets. Indian pharma companies may be supplying to 100 markets. So it's we are a largely export-led business model. I think these large pharma companies or the Indian pharma companies per se have. Every market is unique. Certain markets have a demand supply kind of economics driven market like a US, wherein large suppliers, large customers buy it. So their price control cannot be laid down because it's a demand supply driven market. There are certain markets which are tender based markets which actually see some sort of price declines on a 2-year basis, on a 4-year basis when the tendering cycle comes. So every market is unique. Having said that, a generic business on an overall basis is a price eroding business, because it's the molecules, as they keep on getting old, there are more and more new players come in and they try to get into the market and squeeze out the other players. So I think that erosion trend continues, but every market is unique from a regulatory perspective and a pricing perspective.
Mrs. Sonam, your views on this?
On the pricing point,
Yeah.
yeah, I think definitely. I mean, as you can see that, if the rule aims to cap US drug prices, I see a ripple effect coming. So if the US succeeds, other developed nations will also tighten their own controls to avoid being the highest price market.
Mm.
So, for example, Canada's Patented Machines Price Review Board, for instance, regulates price based on international benchmarks. and the EU's joint procurement for vaccines also show a trend toward collective price controls. So developing countries like India could also face pressure to, raise prices through free trade agreements, pushing TRIPS plus measures such as patent extensions or data exclusivity. So under the WTO's TRIPS agreement, Article 8 countries can adopt measures to protect public health, but TRIPS plus demands conflict with India's Patents Act 1970. So, section 3, subsection D, which ensures affordable generics by blocking patents on minor drug tweaks, as seen in Novartis case. So, if FTAs impose data exclusivity, generic approvals could be delayed by 5 to 10 years, raising costs for Indian firms and patients globally. So I think to stay ahead, Indian pharma needs a different strategy. First, we must defend our TRIPS compliant legal framework. Patents Act Section 3D, backed by TRIPS Article 1, allows flexibility in IP implementation. So we should also challenge, TRIPS plus demands at the WTO, as India did in 2005 during TRIPS negotiations. So ensuring our generics remain accessible. So and secondly, also diversify to export markets. So the US accounts for 30 to 50% of our pharma export, but Africa, Asian, and Latin American are also growing. So the FTA Act 1992 Section 5 empowers export promotion through incentives like duty drawbacks. So I think we should use them to boost shipments. Also, thirdly, protecting pricing data, US demands for cost disclosures and trade talks could violate Competition Act also, which is the, Section 3, subsection 3, which prohibits anti-competitive agreements. So I think here Indian firms must negotiate watertight contracts to safeguard pricing secrecy because that is the key, as seen in, successful deals like Aurobindo Pharma did. So, lastly, invest in innovation. I think, we are far ahead when it comes to innovation. So, developing biosimilar and specialty drugs like, Dr. Reddy's biosimilar drug is also coming, can offset pricing pressures on us. So, also the IT Act offers 100% tax deductions for R&D. So, which firms should maximize, considering we have to be, above the market. So India's generics are a global public good from malaria drugs to cancer therapies. We are far ahead. So by leveraging our legal framework, diversifying markets, securing data, and continuing to innovate, we can definitely protect our role as the world's pharmacy. So my view is that India's resilience and legal side will keep us leading the charge.
Uh, there is some relief that we do see from Mrs. Sonam's side. So, my next question is to Mr. Vishal. Yes. So, what are the potential challenges Indian pharma exporters could face around pricing disclosures or contract negotiations?
Pricing disclosures, I'm not really sure about the legal angle around that, the pricing disclosures. But what I right now know is we are all, as generic companies, we are all kind of it's a race to the bottom, generic drug pricing, because of the competition that we are witnessing. Broadly, I think at a global level, I think what's going to be good for the industry is so currently what we are seeing is there are different there is a different regulatory framework across country. So that different regulatory framework is leading to kind of uh, is leading to unhealthy competition in the market. So someone who is trying to kind of adhere all norms and produce drugs is at a disadvantage versus probably someone who is not adhering to the regulatory norms. So once the regulatory framework is aligned across all geographies, that would promote healthy competition in the industry, and I think that would translate into a good, a healthy pricing environment. Because now what's happening is someone who doesn't have the right regulatory system is probably undercutting someone who is following all the regulatory norms.
And do you foresee any supply shortages in the US?
I don't think so, because there are adequate capacities. Most Indian companies are sitting on spare capacities to service additional demand that's expected there. So
Okay.
unless that's squeezed, and I think a lot of other emerging companies like Abhijit talked about Corona Remedies planning to venture into the US. Smaller companies are adding to that capacity base, which in turn is going to address So I don't think a shortage-like situation should appear in the next 2-3 years.
So earlier, pharma was exempted from tariffs. Do you see this order as a trade-off to you and also to Mr. Nishit?
So far, we are exempted from tariffs on pharma, but Trump has indicated that he would come with tariffs. So we'll probably see another announcement from Trump on tariffs. Again, so I think if tariffs are implemented, the main reason to implement a tariff is you want to kind of encourage domestic manufacturing. But the point is, US doesn't have a domestic manufacturing base, and if at all they want to set up a domestic manufacturing base, they'll have to invest another 5 to 10 years. A plant that will start, if someone wants to kind of build a plant now, they can start commercial production 4 years or 5 years down the line. They've created a regulatory mechanism to accelerate domestic manufacturing, accelerate the regulatory process around domestic manufacturing. But even with all those things done, 3.5, 4 years is bare minimum what someone would need to kind of create a domestic manufacturing capacities. And again, it would be 3x, 4x more expensive to manufacture in the US. I think no level of tariffs can kind of bridge that differential in cost of what India can provide to them. So tariff doesn't make economic sense, but if at all they want to do it, Indian companies may need to pass on the tariffs because there is not enough cushion in their margins to absorb the tariffs.
Mr. Nishit, your views on this?
Yeah, so I think on the tariff front, seems like looks tariffs would come. Now the scale of tariffs would actually determine what kind of profitability Indian companies can make. Generic companies are any which ways having very low margins, maybe 15 to 20%. Also, probably also needs to be seen how much impact can the channel, which is actually making higher margins versus the manufacturers here, can absorb from this tariffs. But clearly, that will have to be seen because there are a lot of capacities also that are there in the country, which are spare and wanting to supply to the US market. So let's see how and the scale of tariffs that come. Depending on that, probably different companies will be impacted differently.
Okay, so we will now move on to the audience questions. And I would like to start with the first one. This is for Mrs. Sonam. How might compliance burdens change for Indian exporters? And will they need to redesign contracts or IP clauses to fit evolving US laws?
Hi, thank you so much. So I think yes, of course. I mean, it comes to that. I mean, we'll have to look at workaround, and we'll also have to maintain and ensure compliance. So of course, when it comes to change of the laws, we'll have to modify everything and also ensure compliance. So of course, if you are asking me if we have to do that, yes, we have to do that.
The next question is for Mr. Vishal. Do you anticipate changes in buyer behavior from US distributors or pharmacy benefit managers in response to the MFN?
What MFN proposes is they want to cut down the margins middlemen take in the pharmacy supply chain. So I think it's a threat to the middlemen, clearly a threat to the middlemen, because one of the proposed rule in the MFN executive order is they would want companies to sell directly to consumers. So that's in a way cutting the middlemen margins. And I think there's a large margin, at least on the generic side, the supply chain, the middlemen in the US would kind of take 80% of the value, and probably the manufacturer only has 20% of the value. And on the innovator side, the PBMs charge they earn hefty rebates on whatever pricing they charge to consumers. So there is a lot of stake that middlemen have in the both on the branded prescription side and on the generics side. So I think the how PBMs can react. So if you know, a lot of these PBMs are now kind of owned by the insurers. So if you cut down on the rebates that PBMs charge to consumers, rebates that PBMs charge to the company, what will happen is the insurance premiums will go up meaningfully higher. Either if you kind of cut them on rebates, the insurance premium is something you'll have to kind of bear with. So it's not it's by I think the only solution is to reduce the pricing in the US, but then you kind of hit the industry hard, very very hard. Not an easy way out of the situation that US is in currently.
And there is a second part to this question. Do you think this MFN model could spark a counter policy from India as a tighter price control on the imported drugs or preferential domestic sourcing?
Also, India is not importing a very large. So I think if I look at the imports, India imports from the US would be around $800 million, which is roughly less than 10% of what we export to the US.
Hmm.
And again, most of the imports that we do from the US are life-saving drugs. I think it may not make too much of sense to kind of put import duties there, because in terms of value, in value terms, it is not that significant to the US companies. And again, since these are life-saving drugs, you would then eventually penalize your own consumers for the same, because they might pass on those duties to in the price that they charge to consumers.
Okay. So coming from Mr. Vishal, I think Mr. Nishit, the next question is: are you factoring in MFN in your forward-looking risk models?
So, as we have said, at this point in time, the pricing, the generic pricing, the market for generic is actually quite independent of the way the pricing for the prescription drugs are. Again, it's too early. We have to see if this gets challenged in the courts, and these are future growth opportunities for the generic. And as we have mentioned that Indian companies have strong balance sheets, and they have the benefit of lower raw material costs. So currently, maybe in the near to medium term, we don't see this getting impacted. Long term growth prospects of generic companies may get impacted, but again remains to be seen, that given that we are the lowest cost producers in the world, so how much we can further drive down the prices remains to be seen.
Okay. So another question from the audience. This is: how do you see, this is open to all, how do you see the role of Indian government policy in shielding domestic pharma from such foreign pricing shocks? And are there any precedents? Mr. Vishal, if you would like to take that up.
What India can do in terms of policies to shield from such pricing actions, I think the market is very competitive. So obviously, like the US is heavily dependent on India in terms of what they consume as generic drugs, and about I think 90% of what patients consume in the US are generic drugs. So we have immense influence in terms of supplies from India are very crucial to US. But I think the market is also very competitive. There are so many companies that kind of supply to the US, and India has got the largest number of USFD approved plants that cater to that have the capacity to cater to the US. I think from a policy perspective, I'm not sure whether Indian companies can intervene in such a situation to kind of safeguard Indian interest in the situation. But I think the competitive situation is such India would have an upper hand in terms of ensuring that what US wants to either impose as tariffs and other ways they want to cut prices, they don't really impact the margins that Indian companies earn, because ultimately we are helping them kind of reduce their overall drug costs meaningfully. We have been able to kind of 90% of volumes being supplied as generic at a price they can't manufacture in-house. So it always makes commercial sense for them to buy from India, and what they're spending on generic drugs is only 10% of what they spend on the entire prescription drugs, but by volume it's 90%. So I think there is enough incentive on both sides, the US and India, to kind of keep the situation going. And I think this is a very healthy situation for the US, and probably things can improve from where it is today for Indian players. But I think government intervention, I don't really see a scope there whether government intervention can in some way support the industry.
Okay. Ms. Sonam, Mr. Nishit, if you would like to add anything to that.
Sure, Rashmi, I'd like to add in this. So I think for Indian market, a global generics, which is a global generics leader, exporting approximately $9 billion to the US worth of goods. So the rule possess significant challenges. I think the pricing pressures and coercive contract terms and the TRIPS plus IP demand also threaten our model. I think it is safeguarded by the Patents Act 1970. And as affirmed in also in Novartis case, exporters must comply by protecting pricing data under Competition Act,
Mhm.
ensuring fair trade contracts under Indian Contract Act, and also adhering to TRIPS Articles 39.3. So as a global price controls from Canada's PM PRB to EU procurement, I think it looms on India can encounter price shocks by defending TRIPS compliant laws at the WTO. So diversifying exports via Foreign Trade Act 1992, and also innovating in terms of Income Tax Act incentives, and also stabilizing domestic prices under Essential Commodities Act. India's generics powering global health with affordable drugs like HIV and antiretrovirals. So I think we are a cornerstone of our strength. So in my view, India's robust legal framework and cost competitiveness, and considering the global impact, it will ensure we navigate these challenges, and also maintaining our role as pharmacy of the world.
Okay. Mr. Nishit.
No, clearly, so yeah, agree with the previous views. So clearly, government. So there are US is one of the markets where we supply, and there are multiple other markets, and there are certain other markets like India where companies are making a lot of good cash flows. So typically, to that extent, whatever negative profits or losses that they may be making for some time is actually offset higher than more than offset by the cash flows in this market. So to that extent, government would have a limited role dictating what the other countries should do, or how will they, because they have the option of then moving away from us. And of course it's a very long term option, but it's very difficult apart from encouraging the Indian companies by R&D incentives and all.
Okay, so due to time constraints, I think we'll take our last concluding question. So, this is for all the speakers. Given the uncertainty around the implementation and durability of the MFN pricing model, what would be your key recommendation for the Indian pharma stakeholders, exporters, investors, or policymakers to future-proof themselves against such disruptive pricing strategies? Mr. Shah, starting with you.
I think from an investor standpoint, I would say that Indian pharma is in a very healthy position in terms of their strengths. So I think being one of the lowest cost manufacturer in the world, which is what is required to kind of succeed in a global market. So we have all the strengths to kind of build from where we are. I think these uncertainties do pose near term kind of can create near term volatility, but our fundamental strength of being the lowest cost player, and the US kind of needs to diversify away from China for some of their needs, and they are actually looking at India for the same. I think what I eventually think it'll things might pan out in favor of India, while we are kind of seeing this as a threat now. But my sense is things will eventually pan out in favor of Indian companies, and there's a good growth potential there.
Mr. Nishit, your recommendation.
We have India has strong chemistry skills, lowest cost manufacturing base, which is very compelling proposition for any buyer globally from a pharma perspective. Also what adds to these benefits is the balance sheets are pretty healthy. So this is a good confluence of positive factors which probably should continue in future. So I think if these factors do continue in future, probably we don't see any meaningful challenge to the business models that Indian companies have.
Thank you. Thank you, Mr. Nishit. Ms. Sonam, your recommendation.
I think we need to have smart and compliance focused strategy in terms of firms should protect pricing data with non-disclosure agreements under the Indian Contract and Act, and also ensure compliance with the Competition Act to avoid anti-competitive penalties, as as seen in the past cases. Also, my suggestion would be exposure can also expand in different markets like Africa and Southeast Asia using FTA acts. Also, there are incentives to lessen dependence on the US market. And I think investors should fund innovation in terms of biosimilars and high value drugs. Also tapping Income Tax Act regulations, which allows tax breaks to buffer price shocks. So I think all should back India's defense of the Patents Act 1970, which also is a block to restrictive IP demands, keeping generics affordable. So I think by leveraging India's legal strengths, diversifying markets, and innovating we can stay resilient as the world generics leader.
Okay. Well, this brings us to the end of this webinar, and I would really like to thank our esteemed speakers for their valuable insights and our audience for joining us today. This discussion has shown us how deeply the interconnected policy economics and healthcare delivery are across the borders. As the MFN order unfolds, proactive strategizing across legal, financial, and commercial domains will be key for Indian pharma. Thank you so much, speakers, and it was a pleasure talking to you. Thank you and have a great day.
Thank you.
Thank you.
Thank you, Rashmi.